All right, thanks for tuning into Countdown. SBI numbers on your screen. There was an expectation of a net profit of 238 crores. There is a net loss that has come in of 4875 crores. So that's the headline. The stock would have reacted marginally negatively, but I don't think there will be too many positions taken unless the details and the devil in the details is out. The gross NPAs has come in at 10.69%. That too, I believe, in or around the range that was expected. Nandit, what else?
Neeraj, 10.69 versus 10.91 is the gross NPA, which is on sequential basis, and the net NPA on sequential basis is 5.29 versus 5.7. So definitely a marginal improvement is what we can see even in the absolute numbers, remember, of gross NPA. And I think, Neeraj, what the street will be watching out from SBI will be the slippages this time around from the watch list number. That's what Shraddha was mentioning. So I think we need to wait and watch for the details. But she also highlighted in the preview, she said that estimates that, the brokerages had for the bottom line number were varying between profit and loss, though we were looking at a profit number of somewhere about close to 238 crore.
Yeah, so that's the long and short of it, really. The slippages numbers, I don't think will come out immediately. At some point of time, the press conference slated to, or the media conference slated to happen at about 2:30. But just optically, let's see if there's a silver lining now, because optically the numbers marginally off from what we were working with. On the profit front, of course, substantially lower. Saurabh Rathi, senior analyst at IIFL Securities, joins us right now on the phone line. Good having you, Saurabh. Thanks so much for joining in. What's your initial take on the 2 or 3 numbers that we have right now?
Yeah, actually, so net profit is, it's below our estimate. We were expecting close to 800 crore of profit. But if you see, provision has increased substantially year on year. So I think we were expecting provision of close to 13,000 crore. But however, the provision has come to close to 19,000 odd crore. So this has led to take a hit on this thing. I think other thing increasing provision was also because of M2M losses which they have taken during the quarter. So these two things have contributed to net loss widening.
Okay, provisions, as Saurabh highlighted, are at 19,228 for the June quarter, and the provisions for non-performing assets which have been included in the figure 19,228 is something 13,037. But Saurabh, a word on the asset quality, a marginal improvement definitely seen, and the NI number as per our calculation is at 21,798. What were you estimating? How is the NI number looking?
So NI is in line with our estimates. Actually, we were also expecting 21,000 crore of NI. Now, if you'll see, we were expecting loan growth of close to 8% and NIMs of close to 2.7 odd %. So I think NI has come in line with our estimates.
Okay, Shraddha Babla. Saurabh, stay on. I'm sure a lot more questions, but just a quick take from Shraddha as well, from our research team. Johnson, Shraddha, I'm sure you would have questions for Saurabh, or anything else that stood out for you?
So I just have 1 or 2 additional numbers, Neeraj. One is the loan growth has come in at 4%. So in the last quarter, the March quarter, it had picked up to 10% or so, which is also a seasonally strong quarter. But we did expect that momentum to sort of continue, but that hasn't happened, 4% growth. And another thing is that the bank has said that they've not spread the dispensation, they've not used the RBI dispensation on MTM losses, and they've not spread the losses. They've taken the entire hit of about 5,900 crores in the current quarter itself, and that could be one reason that we are seeing that provision number still relatively higher at 19,000 crores. Saurabh, if you were to assume that a large part of that is on account of the MTM hit that has been completely taken in this quarter only, I mean, do you think that could have probably contributed to kind of loss number that we have seen?
Yeah, definitely. If you see the management commentary, I mean, they had a watch list of close to 25,500, close to a crore of watch list, and most of the slippages were used to come from this thing. I mean, were expected from this thing, watch list. So definitely, these MTM losses also have contributed to this increase in provisions, and which has led to widening losses.
All right. Saurabh, we also have the provision coverage number that is coming at 69.25%. So clearly they have taken up the provision on a sequential basis. That could also have led to the higher provision number. That apart, they've also made a provision of 2,600 crores till 30th June towards wage arrears is what they have said. And even when it comes to the provisions for the NCLT cases, the bank has said that they're holding a total provision of about 67% collectively on both the lists. So just want to understand what could have led to this kind of loss, and again, do you believe that as far as the asset quality is concerned, has all the recognition been done? We're still awaiting the slippages number, but they had guided for a watch list of 25,000 crores. Do you fear any of that could have slipped?
See, actually, if you'll see, in case of NCLT cases, they have taken higher provision than what management is expecting, actually. So if you'll see, they are sure they are going to take a haircut of close to 52% on the NCLT exposure. However, they have made a cushion of, they have increased their provision coverage, provision on this thing, NCLT cases to 67%. So we think that going ahead, this provision could be written back and should contribute to profits. So this is what we are expecting. If you see last quarter also, they had done a return back amount of close to 2,420 crore of provisions related to NCLT accounts. So management is quite confident of recovery from these NCLT accounts, similar to what we have seen in Bank of Baroda and other PSU banks, Canara Bank and all.
Right, we have one more number, Saurabh. The slippages number for the quarter stands at about 9,985 crores or so, between 9.5 to 10,000 crores. What do you make of that number?
Actually, slippages were lower. Actually, what we are estimating, we were expecting close to 14,000 to 15,000 crore of slippages. However, the slippages have come down to 9,000 odd crores. So I think this is positive actually. In terms of slippages.
And how do you rate the overall operational performance? Leave aside the asset quality. How would you say the operational performance in this quarter has been?
See, actually, I have not gone through all the numbers actually. So, operational front, I don't know exactly what has come as a PPOP, what is pre-provision operating profit currently. So I'll have to check that and then I can tell on that.
Sure. So, sure. Thank you for joining us, Saurabh. We also have Avinash Gorakhsakkar who's joining us on the phone line. Avinash, what is your reading on the SBI numbers and hence your take on the stock at the current levels?
No, I think clearly, this provisioning which has come in is largely attributable to the NCLT account, and our sense is that possibly a lot of write back of these provisions could possibly be seen in the coming quarters. So I think markets are definitely positive that some traction has been happening on the NCLT accounts. Overall asset quality numbers seem to have been better. If you look at comparable numbers, I think the gross as well as the NPA number, percentage number definitely looks pretty good. So I think overall market is obviously hoping that the NCLT provision which is expected to be written back, I think how fast it comes. But overall, what kind of tone the management commentary, actually is, on the con call, and what kind of loan book growth and asset quality trends which would be depicted in the coming quarters is now something to watch out. But overall, I think operationally better set of numbers. I think clearly, I don't think the provisioning in the coming quarters would be on the higher side. So that is definitely going to be a good soothing factor for the stock.
All right, but Avinash, when you talk about, being optimism as far as the recoveries are concerned, NCLT1 list, remember, did have some relatively better steel assets, and hence we saw relatively lower haircuts, but that's not the expectation when it comes to the IBC list 2 accounts. So do you think that this recoveries card will, or, could actually even play out as far as the second half of the year is concerned?
No, I think the second LCLT list has yet to be, formally approved. And I think, if that at all comes, then I think we could see definitely, case to case, maybe more haircuts or more provisions being taken on those accounts. At least, market is hoping that from the first NCLT accounts, probably some more provisions and some write-backs could come in. I think that is definitely now going to be a kicker for most of the PSU banks, especially what we saw in Bank of Baroda. So I think clearly it would be, obviously be more pertinent to know what the management is hopeful, how much money is going to be written back. Because clearly these accounts, after a long time, if you get those provisions back, that would put a lot of money back into the system. So NCLT 2, one would like to wait for more clarity, clearly.
Avinash, with the numbers that we've seen so far, especially for the corporate banks and larger PSU banks, the preferred banks like SBI and Bank of Baroda, and given that we have seen some moderation in slippages and the net stressed assets, do you really think that interest will now start shifting to some of these banks, given that they have underperformed and that they have valuation support, or would you still remain in favor of private banks, retail banks?
No, I think the frontline larger banks would definitely look quite attractive. I think if you look at SBI, or for that reason Bank of Baroda, I think these are banks which have actually taken a huge write-off and actually made a huge provision, for the bad assets. So I think clearly, at these prices, I would not be surprised that possibly, there could be a good opportunity for somebody who's looking at a slightly longer term kind of portfolio. But the smaller banks, especially the ones which are purely stretcher cases like a Dena Bank or IOB, I think completely are ruled out. But the frontline banks like SBI, Bank of Baroda, or even for that matter PNB, clearly could be a good kind of risk reward for, investors who have a little higher risk appetite, because private sector banks, quite frankly, on the corporate loan book side have not been performing well. It's only the retail book which has been doing well. So I would prefer that, somebody who's got a large, appetite for risk should definitely look at these frontline PSU banks.
Avinash, the question only is that one was hoping for a large silver lining from SBI as well, because that's been the case with some of the other corporate lenders, be it privates or be it PSUs. I take on board your point that maybe you believe that the private sector lenders, corporate-facing lenders, haven't been doing that well on the corporate account. But I thought the troubles were coming to an end. The commentary from Axis certainly seemed to suggest that. Didn't quite see anything like that in SBI. Would you rather prefer an SBI or an ICICI and Axis Bank? Is that what you're saying?
Yeah, I think clearly, Axis Bank has clearly given some better visibility. And I think SBI, as you rightly pointed out, Neeraj, expectations were that, some significant improvement could have been seen in these Q1 numbers. But this doesn't seem to have been at least reflected, at least in these numbers as of now. So I think, Axis definitely looks to be a better position bet if one were to take a relook, because clearly a little disappointing trend in SBI numbers. I mean, we'll have to wait what the management commentary is there on the con call today.
Shraddha, just one question. I remember in the press conference in the last quarter, the MD had said that this seemed to be the last of the quarters of big pain points. In fact, I think post the conference, when he spoke to us the next day, he said that this was the last of the pain points and we won't see the pain points lasting. Somehow, I mean, I'm just saying optically it doesn't seem like that has been the case this quarter. Maybe some of the earlier mentioned pain points have ceased to exist and the provisioning went up, and as a result of which there has been a loss, but there has been some pain nevertheless.
Yes, but two things to that, Neeraj. One is that when it comes to the asset quality number, we are just working with two numbers that we have. One is the gross NPA ratio and the other one is the slippages number. The slippages number of 9,900 crores in this quarter is definitely much lower than the Q4 number, which had come in at 33,000 crores. It's moved back towards normalization, and we are seeing that there has been some improvement there. I think a large part of the loss has to do with the MTM hit. Last quarter also they've taken a big hit and they've chosen not to defer the provision or not to use the RBI dispensation. So I think the large part of the loss could have to do with this mark-to-market hit that they've taken. That's why I think we are already seeing that the stock has recovered sizably. The stock fell when the numbers were announced, but I think it's back in the green.
Thanks for that, Shraddha. We have Siddharth Purohit, and just before we go to Hindalco, because those numbers flashing on your screen as well. And Avinash, stay on. But Siddharth Purohit, just one quick question. What have you made now that you've... Sorry, I think we've just lost Siddharth Purohit. Nevertheless, would have been good to get his view as well. We do have? Okay. Finally. Siddharth, can you hear me?
Yeah, I can hear.
Okay, Siddharth, hi. Thanks so much for speaking to us at Bloomberg Quint. What have you made of the numbers? The market seems to have digested the optical loss number, or the loss number well. The stock is in the green. Have you spotted anything that gives you some confidence about this quarter for SBI and the outlook ahead?
See, after a long time, there is a sign of relief as far as asset quality is concerned. There is an absolute decline in NPA by close to 10,000 crores. And similar amount has been reduced in terms of net NPA also. And in percentage also, both GNPA and NNPA has gone down. So that's a very positive thing for the bank. Absolute slippages also has been lower than what the street was expecting. And another point is that, on the profit and loss side, after long period of time, possibly after many quarters, we are seeing some amount of kind of traction in the NI growth. So that is also a good part. But why the reported losses? Possibly because of higher provisions, both because of MTM losses on the bond portfolio, and secondly, they have also increased the provisioning coverage ratio by taking the incremental provisions. So a decent set of numbers, I would say. But one part is that, on the business growth front, possibly that could have been better, which has really not picked up as compared to other banks. Maybe because of the size itself, SBI is now operating at. So that is one area of concern that, business growth should pick up. But certainly improvement in asset quality is a kind of positive outcome for this quarter.
Absolutely, Siddharth. But do you really remain confident that the gross NPAs for the bank have peaked out? And I'm asking this because it's still unclear about about the fate of the stressed power assets. So that could probably play out in the second half of the year.
Absolutely, I agree with your point that possibly in second quarter we might see some again stays coming back, because as the deadline for RBI's resolution scheme, so when the February circular comes in, possibly we might see some incremental slippages in Q2. But one good part is that I don't know what is the outstanding watch list for this quarter, but in the Q4 it was 25,800 crore for the bank, which was very low compared to its balance sheet. If there is further reduction in that, then I'll take it in a positive way. But I think Q2 will play a very big role, or maybe give more clarity when whether the end of this NPA cycle has come to, or maybe there is some more trouble is left. So I will wait for one more quarter possibly before taking a verdict on the stock, whether to give a buy recommendations or maybe And another point I would like to highlight is the business growth. So if the business growth doesn't pick up, then only asset quality will not justify the sharp run up in the stock price. So we'd wait for more clarity in the coming quarters before taking a call.
Okay.
Stock is definitely in the green now.
Yes, it's been a very sharp recovery, and let's not forget the stock of State Bank of India was already moving higher ahead of its numbers in last 1 month now. It's given you returns of 20 to 22%. But let's shift focus from State Bank of India to Hindalco, which has come out with the numbers there on your screen. I'm just going to take you through the basic numbers, the revenues from the operations. Now, this is the standalone plus the Utkal Alumina combined numbers, 10,670. The aluminium EBITDA for the quarter is 1531. I think the expectation was somewhere about 1300 or something. Copper is 335, and the total EBITDA for the quarter is up nearly 40 to 42%. 1950 crore is the number that we're seeing on screen, and the profits have risen to 734. I think the percentage for profit, pardon me, is up almost 42% for this quarter. So, and our expectation, by the way, was somewhere about 440 or thereabouts. Let's quickly get in an analyst view on Hindalco's number. Let's not forget this stock was also moving higher because of acquisition news. Novelis numbers were good, Aleris numbers were good. The company which they're looking to acquire in US. We're joined by Noel Vaz, Senior Research Analyst at IIFL Securities. Hi, Noel. Good afternoon. What have you made of the headline numbers that we've got in terms of EBITDA, the total 1951, and also the profit figure at 734, which is standalone plus the Utkal Alumina business?
Well, the results have been really good. They've beaten expectations by a very clear margin, especially on the EBITDA and PAT side of things. On the top line, it may look like optically a slightly lower than expectations. We were expecting a number north of 11,000 crores. But given the change in India as 115, that may be to do with the top line mismatch. But on the other hand, it's been a very strong performance. On the operational side, our aluminum production was in line with expectations, about 320 KT, which is in line with what we had expected. Copper is a little bit lower, but then that was to be expected given the shutdown in the plant. But however, it seems that the realizations for the copper byproducts seems to have made up for it, which is why copper has come in with a pretty good EBITDA of 330 crores as against my expectation of about 310 crores. So on the overall, I would say a pretty strong beat on all counts.
It's like a strong beat on all parameters. The interest expense also for the quarter is lower by 23%. In fact, their net debt to EBITDA now stands at 2.57 times compared to 2.67, which was there at the end of March 2018. But let's go across to Nikki, who tracks this stock and the company pretty closely. Nikki, according to you, what have been the key highlights of the numbers?
Clearly, we're looking at a total EBITDA number of 19,051 crore, which is a standalone plus Utkal aluminium figure that we're talking about. This can be compared with an estimate of 1650 to 1750 that most of the brokerages were working with. So clearly, that's a beat on that count. I see the much beat is coming in from the aluminium division, where the EBITDA growth is at the EBITDA number stood at around 1,531 crore as compared to an estimate of around 13 crore kind of a figure. Copper division somewhat is in line according to the estimates that most of the brokerages have out here. The company in its statement about the aluminium business has said that this is on account of better realization and stable operation. However, for revenue in terms of the copper segment, that has seen a little amount of downtick there on compare of YOY basis. That's on account of the plant shutdown. In terms of the production numbers that the company has clocked in, that also looks a tad lower than what we were estimating. This number has come for the copper division at 81 KT as compared to 109 KT. Now, we were working with an estimate of around 90 KT, 95 KT. So clearly that looks a little miss on that count, but then otherwise a strong performance coming in from the aluminium business according to the estimates that we have.
Just hang on. We want to take a headline as well. Noel, stay on as well. Avinash, you are still with us. What have you made of Hindalco's numbers? What's the standout for you? I think Avinash's line is disconnected. Noel, if I was looking for that one headline that stood out, I heard both you and Nikki speak about how the EBITDA is above estimates. Hindalco plus Utkal, the combined EBITDA numbers also looked okay. But what is that one thing that stood out for you from Hindalco? And post these numbers and post the run-up that we've seen already in Hindalco ahead of the numbers, what's the call on the stock?
Well, the one thing that has stood out for me is that regarding the aluminium segment, they've specifically mentioned the better realizations. So this is actually a very crucial figure because one thing that is there is very recently there has been a supply disruption, another supply disruption in the aluminium market. So there has been a strike at Alcoa's Australian facility. So given that we are seeing that this much disruption coming in, as well as the Rusal supply disruption has not been completely resolved yet. So given that, we can see that the aluminium smelters like Hindalco, especially who have already backward integration, they would definitely benefit. So going forward, we could potentially see Hindalco's aluminium division post strong numbers like this going forward as well.
Okay. Noel, just want to check what's the stock call here with regard to Hindalco, considering you're saying it's a beat on all the parameters. Will you look to change your target price? And if you could tell us, what is it currently?
Well, currently we have a buy rating on Hindalco at a target of 296, and we're quite positive on the company, especially considering the fact that it's trading about 4.5 times FY20 EV EBITDA. We would need to study it a little bit more, but I would quite strongly consider maybe upgrading the stock going forward. Also, another thing is that the LRS acquisition, even though it is not completely finalized as of yet from the regulator side, it is also a very strong value addition for the company. So going forward, I see only positive for the stock.
Okay, only positive for the stock going ahead. Nikki, do you have any questions for Noel?
Well, I see the net debt to EBITDA number, which has actually improved to 2.57 times as compared to 2.6 times that we've seen as of March 2018. Noel, I'd like to understand if you see this figure now going above that 3 times mark, which is about the comfort level for most of the standard, for the industry standard, once the acquisition comes through and is weighed on the financials of the company?
Well, actually, this number that has been mentioned in the press release, which is 2.5 times to 2.67 times, that is actually on the standalone level. So as per their briefing given previously, the LRS acquisition will push the Novelis net debt to EBITDA net leverage to about 4 times. And going forward in 2 years' time, they see that reducing to 3 times. So on the console level, we should see that in another 2 years' time, even though it may expand up going forward to maybe say around 3.5 times, we do see it coming down below 3 in the next 2 years' time as per the company's estimates.
Noel, we'll leave it at that. Many thanks for joining in today and giving us your perspective. Really appreciate. Nikki, final thoughts? Anything else that stood out for you?
Yeah, so I was actually looking at the input cost pressure guidance. That's where most of these companies usually give a guidance of how the picture looks like going forward, where they've said that this was, the EBITDA rise was despite the increase in input cost, mainly of coal and furnace oils. So that's two things that we'll need to keep an eye out, because cost pressures are something that usually take a bearing or take a weigh on the profitability of most of the metal companies.
Okay, Nikki, thanks so much for joining in and giving us that bit as well. So, well, optically both the numbers, or rather factually both the numbers have some positives in them. The analyst on Hindalco believes that things will only be better for Hindalco going ahead. It's had a bit of a run up. This week's chart will tell you what Hindalco has already done. Intraday it may be down about 1.7, 1.8%, but if you pull up this week's chart for Hindalco, you will see the stock has gained well and truly ahead of the numbers. So some bit of a downtick that is coming in post the declaration of the numbers. In SBI's case, while it may have gone up a little bit, I think the initial reaction was a bit of a disappointment, then a bit of a pullback. There's a lot of trading activity out here, quite frankly. You just need to ignore the first 5 or 10 minutes of trading activity, and then let's see what SBI does. I thought the numbers were okay, nothing too dramatically great about SBI's numbers, but for the fact that the asset quality did show some signs of improvement. Let's wait and watch what happens there. So, two large numbers, Navneet.
Let's move on to a mid-cap then, and let's speak to the management. We're going to be addressing Liberty Shoes numbers here. In fact, if you look at the June quarter numbers, the profits have doubled this time around. What's been the key factors that have contributed to the earnings this time around? Let's check with the Chief Executive Officer, Mr. Adesh Gupta, who joins us on the show now. Hi, Mr. Gupta. Good afternoon. Just going by your press release, sales are up 14%. EBITDA has seen a growth of nearly 16%. Profits have more than doubled for the quarter. Tell us what has led to this sort of growth this time around.
First of all, thank you for calling to the channel. I think we have grown almost about 20% in the last quarter, which is the quarter one. And because of the top line growth, automatically, the bottom line improves when the top line grows. However, we have taken a number of measures, at different levels. The one is that, we are doing a consolidation process where, we are looking at how we can cut down on expenditure. And one of the plant which was set up in a tax-free zone, which was working for almost 10 years. So we are closing it down so that, we can bring those capacities back to our plant where now the tax incentives are not there. So that is one where we can see the cost reduction as well as the overhead reduction. Then we are launching new product ranges, new brands like Healers and some other brands. And on top of that, the reduction in, GST rates at 500 or 1,000 rupees now. So I think there are a lot of things which are coming all together. And then export is also recovering, which was not the case earlier. There the margins are pretty good. And also in B2B segment where we are doing institutional business, which is, industrial safety footwear, our margins are pretty high there. So there is about 30% growth so far. So I think all those factors have resulted into bottom line growth also.
Could you tell us what was the volume growth, Mr. Gupta, on your top line this time around?
In terms of number of pairs, we have sold almost about 3.5 lakh pairs more, which is about 14 or 15 odd %. And in value terms, it's about 20%. So what we see, in our stores also, we see that there is a value growth. The ESP is increasing. So that is a good sign for top line growth also.
So will it be correct to say that there was no price-led growth seen in the June quarter?
Not really. There's no price increase, which we have done so far.
And can this 20% number go higher now that the GST rates have fallen for the price range of 500 to 1,000 rupees?
No, what we believe that, because there are so a lot of verticals we have, which is, retail, then B2B, then exports. I think put together, it is difficult to put numbers for one vertical alone will not make a big difference. But eventually what we see that, this whole year trajectory over the next 9 months, we are looking between, let's say, 10 to 20% growth, probably 20 more closer to 20. That's what we aim at.
Sir, institutional sales, as you mentioned, that's contributed higher than what the contribution has been in the previous quarters. In fact, the margins from that segment has improved. Can you tell us if you could break down those margins for us? And going ahead, do you think the contribution can increase from 39%?
In shoe industry, there are so many variable factors, with raw material prices, human cost, and so on and so on. But overall, what we see in institution, there are two segments. One is, the direct business we do from the manufacturing. The other is trading, which is based on tenders. In tenders, normally you do not have higher margins. But when we do manufacturing business, which is growing at 30%, I think that there will be definitely a lot of contribution coming from that particular segment overall. But I see overall trend, is that, we are aiming at a higher, bottom line compared to last quarter or last year. So in general, I think the performance should be far better than before.
Okay, sir. We'll leave it at that note. Thanks a lot for joining us and taking us through the earnings of the June quarter. And all the best for the remainder of FY19. Well, that's the management of Liberty Shoes, and they've clearly highlighted the entire revenue growth that you've seen during the quarter has been led by volume growth. There was no price-led growth seen, at least for the quarter gone by. But remember, the numbers will look different from second quarter onwards, considering the GST rates on that range of 500 to 1,000 rupees has come down for all the footwear companies, and Liberty Shoes in today's trading session has been trading with gains of nearly 2 to 2.5%. Some numbers on your screen, and I think GAIL numbers are out as well. EBITDA is up about 32%. So that number is well and truly above estimates. The revenues were anticipated to go up about 3%. I think those two have eclipsed estimates, and net profit was expected to be up about 14%. It's coming in at 23%. So there's been a top line number which has been better than what we were working with. Similarly on the EBITDA front, and therefore similarly on the bottom line front, on all three parameters, the numbers have looked better than what we were working with. The expectation on the margins was about 12.7%, but on that business to clock in a 13% margin versus 11% margin. So the EBITDA margins too well and truly above estimates. Petchem volumes were expected to be lower. I don't think either the gas transmission volumes have been better, or the petchem volumes too haven't contracted as much as anticipated. There has been a better than expected top line and bottom line performance from GAIL India. Bit of a spike, then a bit of a cool off. Nothing too much out there, but yeah, the numbers better than estimates for sure. 1,259 crores versus our estimates of 1,164 crores. So that's one more stock or one more large company that has reported numbers which are fairly healthy. Good start, a good quarter really for GAIL in the session. Now, just before we cut across to State Bank of India, and we'll cut across when the management is talking about granular details, but I think what's important for a lot of viewers who tune in right now is to try and figure out how to trade these companies. Manav Chopra of Indiabulls Ventures with us on the show. In a bit, we'll also get in Hadrien Mendonca. Okay, we have Hadrien Mendonca with us as well. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Clutch of results, so apologies for not coming to you on time. But Manav, quick thoughts here, because we'll also have to cut across to SBI as soon as they start speaking. Quick thoughts here. Firstly, on SBI and the Nifty Bank, what would you do here if you were wanting to take a trade?
See, specifically, I don't recommend taking any trade on SBI currently, as long as we are trading up below the levels of 324. So this is an important resistance. Only if it manages to close above that is when you can see some momentum going forward. And the support for the stock on the lower side will be at 310. So at the moment, I think one should let the stock cool off for a bit, and then eventually you can take a call on that.
Okay. Fair call. Thanks a lot for that, Manav. First, let's hear out the management, and then we'll get in our experts.
I think the number which needs to be looked at is the fresh slippages, which is very much in accordance with the guidance which I had given at the time of the year-end earnings call, that our fresh slippages will not exceed 2%. So it comes to 1.95%, and the variation in outstandings in respect of the existing accounts will always be there. The credit cost has come down to now 2.55%, and again our guidance was at around 2%. So we are very much on that target. As I said, that first quarter we have made some aggressive provisions to increase the provision coverage ratio. that's why the credit cost looks elevated at 2.55%, but there is a huge improvement as compared to the previous quarters. The growth in domestic advances is 7.25%. The overall growth is lower because of two factors as far as the international banking book is concerned. One is on account of the buyer's credit which were being given against LOU. So there is an impact of almost about 45,000 crore. And we carved out a subsidiary in UK, so another 10,000 crore has been transferred to the subsidiary in UK. So again, the growth performance as far as business is concerned, and particularly on the advances side, has to be viewed in light of the international banking book, where these two have impacted. On the liability side, the CASA franchise and particularly the savings bank franchise, again a very good growth. The savings bank deposits have grown by 9% YOY. Again, this performance has to be viewed in light of the fact that last year after demonetization the growth was 27%. So if we average out, then it becomes almost 15 to 16% annualized over 2-year period, and savings bank deposit for the first time for the bank has crossed 10 lakh crore figure. So not a mean achievement to have that kind of savings bank growth. And overall the CASA has gone up by 69 basis point year on year basis. All our subsidiaries, they continue to perform very well, and as I said, that be it the growth, be it the asset quality, be it the strengthening of the balance sheet, which has been the strategy, that rather than focusing on what the quarterly numbers look like, the emphasis has been on strengthening the balance sheet. And if you compare as previous year YOY, the provision coverage ratio has gone up by nearly 900 basis point, and without OCA the provision coverage ratio has gone up by 1100 basis point. So it is now the provision coverage ratio is 53%, and if you look at the corporate book, if we look at the provision coverage ratio for NCLT, so they all are now in a position where overall book we are almost aligned what we call the loss given default. So our PCR is now fully aligned with LGD as far as the corporate book goes, and NCLT 1 and 2 definitely we are sitting on some surplus. NCLT 1 we have provided fully for all accounts as per what was required by the regulation, as well as in line with what is the estimated recovery. And one account alone, we are expecting that as and when it gets resolved, the bank will get almost 4,000 crore recovery. That is the estimate we have. NCLT 2, we have a provision coverage ratio of now 79%. So that itself, even if presuming that the recovery will be 30%, even then we are sitting on a higher provision as far as NCLT 2 is concerned. So whatever angle you look at, the provision coverage ratio or what could impact the earnings in the coming quarters, all has been absorbed by June. On the asset side, again in September we intend to further improve the provision coverage ratio, so that from December onwards there will be no looking back, and there will be no hangover of the past credit costs. So that is where the entire strategy is around, and this strategy is yielding very good results for the bank. So these are my opening remarks, and open to questions.
One by one.
One by one, please.
How many of these, good afternoon,
Yeah.
from BTPI. Sir, how many of these fresh slippages came from the watch list, if you could give us an idea?
91%.
91%. And the ones that came from outside the watch list, can you
This
give us
is just very nominal. 9%, so you can take 1,000 crore outside watch list.
See, out of this 9,900 crore slippages, corporate slippages are only 3,704 crores.
That's a very small number, and 91% is from the watch list. This 3,700. The rest is retail, agriculture, SME.
Yeah, and first quarter always the retail is elevated. Going forward, the retail slippages will come down, and first quarter in agriculture particularly, it is all in the state of Maharashtra and Karnataka.
So when you say you are fully provided for anything that could change what are the provisions you have to make for the accounts that meet your NPAs as of 27 August? Has that also been changed?
Everything.
And when you say you're going to increase provisioning average,
So basically, I have in mind that some of the power assets, 7 of them, so we are trying to resolve in within this month, or you may say within this quarter. So when that happens, then your provisioning gets advanced. If it is in NCLT, you still get 9-10 months to provide and whatever is the final outcome. But if we resolve them, then whatever is the gap between the provision held and whatever is the estimated recovery, so that will need to be provided in September quarter. So that's why, like I'm saying that. Yes, absolutely. The PCR, if you look at the corporate book level, it is, as I said, that it is aligned now with the loss given default estimates. So we don't have to. But still, as I said, that power sector, because we are in very advanced stage of resolution, in respect of these assets, we have the clear idea that what are we going to get and what is our provision.
Fair to say that there would be no incremental provisioning going forward, be it for the stressed power assets that you already have?
For stressed power assets, it will be, but I am sitting on surplus in certain assets. So that's why you have to look at the portfolio level. If you look at the overall portfolio level, there is no sort of any additional burden. Normal slippage, normal provision goes up because of 2 reasons. One is the aging provisions and one is the security if it gets diluted, which is normal. For the bank, it is the figure is about 3,500 per quarter. And this is, there are account specific provisions. So power, if I resolve 7 accounts and if there is a gap, that gap I will have to provide. But there, as I said, that I am sitting on excess provision as far as NCLT 1 and NCLT 2 is concerned. So there may be timing difference. Suppose I get the resolution for the account which I am referring to within this quarter, then it will offset my entire provisioning requirement for power. But if power in any case, because we are resolving, so I have to provide. It may so happen NCLT 1 may happen next quarter. So we have to keep that timing difference in mind. But overall, we have to look at the picture for the whole year. That's what I always say. That don't go on quarter basis. That is not what I look at. What I am looking at is what will happen during the year. And if I look at what will happen during the year, the requirement for provisioning on account of the NPA account or the legacy NPA account, we have now largely taken care of.
Yes, please use mic. Ritu, please use
yeah,
mic.
Ritu, can you use mic? Yeah.
Yeah.
So I just wanted to know, you said you were going to be in touch with the regulator to extend the deadline for resolution for these power assets so that they don't have to be sent to the NCLT. Have you heard from RBI yet?
No, we have not approached yet.
Why is that so?
So if I don't need to, then I will not approach. If something happens before 28th August, so there is still time. So we will approach if required. But if we can manage without approaching, I will do it without approaching.
So you have an outlook on these power assets that you referred to. You said that there may be a gap in provisioning and therefore you would have to provide. Do you have an estimate of
Absolutely. We have the, because these assets for State Bank of India, they are about 17,000 crore. I have already provided about 40% on the power assets. So if you look at our estimated recovery on these assets is 50%. So my estimate is that for this 17,000 crore, the requirement will not exceed 3,500 to 4,000 crore. And that is what we expect to recover from NCLT 1 account. But timing difference, as I said, all the provisioning, or what I call all the pains, all the blows, we are taking upfront. and we are not leaving anything for the future earnings, which should remain protected against whatever is the past. And that is where we have advanced quite a bit, and in June we have almost covered our flats.
Last quarter you mentioned that you would be lending a helping hand to some of the banks which are facing BCA. Now this quarter you've seen some growth on the corporate loan book. Is a lot of that coming from there, or are you also pushing your own?
No, growth is largely still coming from retail, but we have a fairly good robust pipeline as far as the corporate is concerned.
What I wanted to know is that from the PCA?
No, not exactly. As far as this growth is concerned, I don't think there are any takeovers from the PCA bank as yet. But if any customer approaches us, and if we are comfortable with the risk profile and we are comfortable about the future of that particular enterprise, then we don't mind or hesitate in taking over some of the loans from PCA banks if they are unable to help in those particular accounts. But as I had mentioned earlier also, it's not with any intention to compete or take over those loans. It will be if necessitated by the client requirements. But ultimately it would also depend upon that how much comfort we have on a particular client.
Speaking of the corporate sector, where exactly are you seeing demand trickle in from any particular sectors? And if you could give an idea of what the pipeline looks like in terms of projects and even in terms of investment that is being lined up?
A lot is happening. You are aware that NHAI itself, we have sanctioned a loan of 25,000 crore. So that money definitely flow into the road sector. And similarly, there are many central government undertakings which are in the market for borrowing. And they are our prime clients. And SBI will be in the forefront to lend to these clients for sure. They all are AAA. It does not have any major impact on our risk-weighted asset. So as a matter of a strategy, definitely the high-quality corporates, not necessarily that it has to be only the public sector. And the reorganization which we did, where we have created corporate accounts group, it was there, but we have in fact reorganized their mandate and profile. So this group is focused only on those accounts where we believe that probability of default is zero. And that they have been given free hand to grow. And second is that they have been given the responsibility of broadening the basket and focus on generation of other income. And
well, that's State Bank of India. And confidence, yes, but as we said, don't look at the first 5 minutes of reactions. You would have thought that, oh, the numbers are too bad. Then the market has digested all of those numbers. Now the stock is back down about a couple of percentage points in the red. So don't quite know what to make of it. You know, there's an announcement on Jet Airways and I'll get to that. But Deepak, Shenoy is waiting by, as are Hadrien, Mendonca and Manav, Chopra. And gentlemen, really appreciate all of you being patient with us, but couldn't quite help it. SBI was talking and had to be with that. Deepak, what did you make of the numbers, the commentary? And now that the stock seems to have digested what the numbers were and the management commentary as well, what is your outlook?
Neeraj, I've been, it's kind of a standing joke that every time SBI announces results, it says the worst is over. And I guess the same words weren't exactly used, but you kind of keep getting the feeling that's what's being referred to. But this time, at least, they've given us a number that said September is going to be bad, primarily because of power resolutions, and we're looking at December for some kind of perhaps recovery. What hasn't yet been stated is RBI is doing another EQR. There will be more accounts that they will force SBI to take further NPA recognition on. There is also going to be, I'm looking at the numbers, we're talking deposit growth of 2%. Advances have grown by 7%. Now the whole banking system has grown by 12% in credit in as of June end. So SBI has actually grown less, and SBI is what, 30% of the banking system. So you're effectively saying that the largest player is growing much slower than the overall averages. I don't think this is a system of purely MTM loss by because of the treasuries or the fact that they've taken that loss or they've provisioned more. The core business itself is not really doing that well, and as much as I'd like to say that this is improving, it does not quite look like it. A lot of the private banks seem to have done way better in terms of credit mobilization and growth.
Deepak, do you then foresee more pain in the coming quarters for something like SBI, or everything is just priced in now?
No, I think SBI is going to see pain. I mean, if banking sees pain, SBI will see pain. It's kind of like a 1:1 kind of reaction. But the point here is, I think NPAs are not over. We're still looking at power. We don't even know the size and scale of it. We're looking at potentially resolution or some kind of structural change in RCOM. We're looking at Videocon. We're looking at a bunch of others that will further, give them more clarity in terms of how much more loss they have to take. All of this, and then next year Ind AS regulations come in, which might actually be helpful to the banks. But I think there is some more pain. I don't know how much, because as much as I'd like to say it, I don't think I will ever say the worst is over until it's actually visibly over, which may be at least 3-4 quarters from here. But having said that, I'd like to see operational improvements in performance. I'd like to see credit growth return to a double-digit number at least before I can say that this is really a recovery.
Well, it's been a really volatile day for State Bank of India. The stock was trading in the red. It went up after the fresh slippages numbers were reported, but the gross slippages looks like that's once again disappointed the street, which is coming at 14,350 crores, and stocks now down almost at day's low, actually 4.5% lower for this one. Let's quickly get a technical check also going. Hadrien, if I could come to you, first tell us what are your individual stock ideas for the day?
Yeah, so both are buy, and I've gone with a safe bet and a high beta one. So first one is TCS. I think TCS is finally coming out of its consolidation phase that it entered into, in the past 2 weeks. I think we're going to see a very good up move from here on for TCS. So one can initiate long positions for a target of 2045 and place a stop loss at 1969. Whereas the second long that we are, second stock that we are pretty bullish on is Sobha. It is a high beta one that we have chosen because we are seeing a falling channel pattern breakout on not only on the daily but as well as the weekly charts. So I think even the volumes have been pretty strong and they're participating pretty well. I think Sobha has a very good potential of moving towards the 558 potential target that we are expecting in the near term. And one should protect every long position in Sobha with a stop loss close to 525 levels.
Manav's stock ideas are left. Manav, your stock recommendations for the day, maybe a word on SBI now that it's down 4%.
Yes, first I'll start with SBI. Like I mentioned, it's important that the stock needs to cool off a bit because we had already seen a sharp volatility on the intraday basis. But Neeraj, one thing we shouldn't forget that, the stock is already preceded by an advance from its recent lows of 250 towards the levels of 325, the highs that we made. I think there will be some cool off or some profit booking that would eventually come into the picture. Yes, there has been a medium-term trend reversal, but long position at the current level definitely does not provide that risk-reward ratio. I sense the important support on the short-term basis for this stock would be close to the levels at 280 on the lower side, and I think that would be one of the price levels where one can look to initiate some longs. My stock-specific idea, my first buy call is on Hindpetro. Basically, we see some sort of a topping out formation in the crude prices, and the prices have also breached its important support levels. So looking at Hindpetro, it is kind of forming a bottom formation on the higher time frame charts, and volumes are also suggesting some smart buying action which has taken place near the important low levels. The momentum indicators are suggesting some positive divergence, which eventually indicates some sort of a reversal going forward. So it's a good buy at the current levels with a stop of 275 for an upside target of 315. My second call is buy on Kaveri Seeds. Basically, this is purely on the momentum basis. The stock has been in a very good momentum recently, and most importantly, every new high has made record volumes, so which is indicating that a fresh highs with record volumes, a very strong momentum, and the oscillators are in the buy mode. I think the stock would eventually also continue to outperform. 610 will be the stop on the lower side for an upside target of 660.
Okay, those are some individual ideas coming your way. Just want to highlight few stocks. Skipper was down 10 to 11% yesterday. It's fallen another 13%. And if I'm not mistaken, I think JTEKT was to announce their earnings today. And yep, it was lined up for today. The stock's fallen almost 11% right now. It's seen a very, very sharp selling pressure. Remember, this was also the stock which was moving, I guess. It's just fallen in the last 10 to 15 minutes of trade, down almost 13% in trade around the level of 115. Deepak, shifting focus away from State Bank of India, the other big number which came today was Hindalco, and this is a company which has been in focus because of their new acquisition in US of Aleris. The numbers from there were also looking good, so it was a beat probably on all parameters. What we are seeing on screen today, the stock's fallen, maybe some bit of profit booking has definitely come in, but what's the view on the entire metal space, be it ferrous or non-ferrous?
I'm not honestly tracking Hindalco, so I don't know the numbers. I'm not actually positive on metals per se for the rest of this year. I feel there's going to be a bit more damage in overall prices. There's a lot of enthusiasm, especially in steel. While there is a recovery, I don't know if it's yet hit, but the Russian ruble caused the steel damage last time. When the Russian ruble collapsed from 30 to 60 to $1, Russia reduced steel prices dramatically, and that caused a string of cuts in prices from Japan, Korea, and China. And then now you're seeing the ruble has depreciated substantially this year, 17%. So we're going to see some kind of an action on the steel front. Russia is a fairly big producer. So I don't feel that that's a great foreboding for price. Having said that, I don't have a position, so I'm not tracking any of the individual stocks.
Deepak, if you had portfolio investments in a Page, in a Jubilant, in a Bata, now all different forms of consumption, so to say, but ticking that basket, and again, the valuations are not exactly the same. Page might be the most expensive one, and frankly, if you just look at the P multiple expansion in Page, I was just looking at the numbers last 2 years, the EPS CAGR is about 30%, but the stock CAGR is northwards of 50. Clearly shows that the multiples have expanded meaningfully for some of these names. Would you be comfortable carrying on with them in your portfolios or client portfolios, or would you now start taking some chips off the table?
I think it's different for different stocks, but Page, I know I've missed Page. It's a phenomenal momentum stock, and it deserves to be in most momentum-ish portfolios, definitely. There have been calls for buying fundamentals. Fundamentally, it's done very well on growth parameters. It's just been a little expensive, and it's just gotten more expensive. I would still say, I'm not looking forward to fundamentals going up dramatically for the next 5 years. As dramatically, prices may, even if fundamentals do go dramatically, prices may, to justify these prices, you would have to do these kind of earnings increases maybe 3 years in a row. And do you want 3 years of no returns while the P's cool down? It's a tough call to take. It's a tough call in the face of the stock flying so much, but I don't think I'd be on that bandwagon right now. Bata, of course, does have other triggers for it, and I think although it is expensive, so is Jubilant Foods. They actually have a slightly better thing working for them. Jubilant Foods, not as much as Bata, but I'd go in that order. If I were to choose cheapest to most expensive among these expensive stocks, it would be Bata, Jubilant Foods, and then Page. Just from the standpoint of what I think will happen in the next 10 years.
Okay, Bata has been really active in today's trading session. In fact, we've seen a lot of activity coming in on the derivative side as well. Deepak, Capitalmind has come out with a report on Snowman Logistics. I've not read the report. If you could tell us what's the prognosis there?
So actually the report's more about cold chain logistics than it is about Snowman, about what happens in cold chain logistics. There's a significant need, and there is really one listed player you can look at here. There is the other one was Coldex, where I think the CEO has now moved. The CEO of Snowman is actually ex-Coldex, so there is therefore probably some of the learnings from Coldex that you might bring in here. India needs a lot of cold chain, logistics. 75% of whatever is in cold chain warehouses today is potato, whereas we need a lot more in terms of other perishable goods, in pharma, in ice creams, and in a bunch of other stuff. So this is a very nascent market. We probably are understaffed by a factor of 15 or 16, both in refrigerated trucks, which are called reefers, or if you look at even the storage, the warehouses. We've seen a lot of tax subsidies. So Snowman, for instance, has done a lot of capex. Because of the higher depreciation allowed, its cash flow is fairly positive, but its net profits are negative because it's able to take that much more depreciation, which means the runway forward may be that once the capacity starts getting utilized, you've already marked down the depreciation, so you get a lot more profits in the longer term. Now there is operational risk here, there's execution risk, but looking at the size of the market, looking at the fact that India actually produces way more food than it should because of good monsoons, good sunlight. We've got farmers demanding compensation that their prices are too low. The only way to solve this is to put food in cold storage and release it at various times instead of all at once whenever the harvest happens. In that context, next 5 years, we hope to see a significant change. We've not taken a position yet. We've just been analyzing the industry. That was more of a industry analysis and the only listed player in the space. But we feel this is a very important space to look at in the next 5 years. As global warming, temperature changes happen, we're going to need cold storage-based warehousing and transport going forward.
Okay. Deepak, really appreciate your time. Thank you so much. Just so many earnings, couldn't do too many other conversations, but thanks much for joining in today.
Thanks. Thank you.
That's Deepak Shenoy with his thoughts. By the way, just before we take that break, I was wondering what's happening to the charts of some of these names. The last few days, Exide has been on a bit of a roll. Hadrien, Mendonca, if we haven't discussed Exide already, trading at the highest point of the day, trading at 52-week highs. If you had a long position here, would you carry home the long position?
Yes, I would definitely carry the long position home. In fact, I would actually buy and actually not see for the next couple of months because we are seeing a very, very strong breakout on the weekly charts, and this week we are closing above the same. So I think this is indicating that there is a lot more for Exide Industries from here on. So definitely, I'm seeing the stock moving beyond the 330, 350 mark. If you have a 2 to 3 months perspective. It is something that one should not miss out. Exide Industries is a must buy even at these levels post a breakout.
Okay. And Manav, divergent charts, at least today for Den Networks and Hathway. Hathway is in the red, Den Networks is still up about 18%. Would you trade either of these two names?
See, Den Network actually has already seen a very sharp decline from its recent peak of 150. Yes, this advance that we've seen in the last couple of days has been accompanied by good volumes, but the overall trend still remains on the negative side. I think one should let for Den Network at least, if in case the stock doesn't exceed 64 on the upside, I think I will still want to just take a pause on this view for at least Den Network going forward. Hathway, almost a similar chart. I think both these Hathway and Den Network have bounced from its oversold levels. I think in case if next week we see a follow-on move and once if these stocks breaches its resistance, it's only one can take its long position, because previously also we've seen such kind of a formation where bounce from its oversold zones and often these stocks usually fade out and form new lows. But looking at the volume, things definitely looks a little more interesting, but one should not really jump into this at the current levels.
Okay, that's Hathway Cables for you, and a lot of stocks moving around. We'll keep getting you more technical views, but it's time for us to slip into a short break here and countdown. On the other side, we get you the Fab 4 stocks of the day. At 3:15 p.m, we get you what the dealing rooms are recommending and some closing strategies from our technical experts. Stay tuned.
How do you go from being a level 3 CFA who works in private equity and knows what words like financial modeling mean to someone who's made their mark on the world by understanding the ins and outs of women's makeup? Hi, I'm Manish Taneja and my journey is a colorful one. I've been on both sides of the pond. I started out in corporate India with a sound job and a solid salary. I was perfect marriage material. And then I found my calling, makeup. Today, my company Purple makes 15 crores a month in sales and is profitable. Let me tell you my story.
Agons of business never stop. Only on Bloomberg Quint.
Okay, back with countdown right here on Bloomberg Quint. 23 minutes left for the markets to shut shop. Just bring up what Europe is doing before we get to the Fab 4 stocks of the day. Europe should come up on your screen. Well, down and not out really, but yeah, there's a steep cut. This is the biggest cut that I've seen at this time around for the European markets in the last 4 or 5 trading sessions, at least, if not longer. Dow future should also come up on your screen, down about 1/3%. So there's weakness across the global spectre, and it may rub off on us, not just right now, but maybe on Monday as well. So, yeah, the list is looking slightly tough. However, we still just down about 1/3%. So I'm sure there are a lot of stocks which are flying around. Let's try and find out what's made it to Yash Upadhyay's list of the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Neeraj. So we have a very diverse Fab 4 list today, from IT, auto, banking, all the way up to FMCG. So first up, we have Zensar Technology. That one's reacting positively to its Q1 numbers. Their revenues have grown by about 11% to 905 crore rupees, aided by a strong growth in its insurance and digital services verticals. Also, their net profits saw a healthy 14% growth on a quarter-on-quarter basis. So all in all, a good set of numbers, up about 5%. Eicher Motors is zooming ahead, up almost 6% at this point in time after Macquarie came out with a report wherein they have maintained the outperformed rating on the stock and have set a target price of 37,000 rupees. Now they came out with a good set of numbers. It was an operationally strong quarter with their EBITDA number coming in much higher than their estimate. They expect the strong momentum in sales volumes to continue going forward and have estimated their net profit to grow at a compounded annual growth rate of 18% over FY18 to FY21. AU Small Finance Bank, that one's up about 8% after a big bulk deal, saw about 9.3% stake change hands in pre-market. We don't really know who the buyers and sellers are. We'll have to wait until 6 p.m. once the exchanges update that information. And lastly, footwear stocks are buzzing in trade today. So something like a Relaxo, Bata being the case here, it's up about 2%. It hit a fresh record high today with volumes too coming in at the higher end. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. And let's move on and get our next guest on board. We're joined by Gaurang Shah, Head Investment Strategist at Geojit Financial Services. Hi, Gaurang. Good afternoon to you. I'm going to take one of the stock which Yash highlighted in his Fab 4 list, Eicher Motors, which is now the top gainer in Nifty. The results came in and there was a bit of margin expansion seen despite of commodity cost pressures which were witnessed in the quarter gone by. What did you make of the numbers, and what's the call on the stock now? It's crossed the 29,000 mark in today's session.
Thank you, Navneet, and good afternoon to all of you all. So, Royal Enfield motorcycles are going ahead full throttle, and there is a clean road ahead for them in terms of growth. The commercial vehicle business in terms of Eicher trucks doing equally better, and their JV with Volvo is also throwing in a reasonable run rate. So you have a stock which is fired up on all 4 cylinders, and I don't think there is going to be any dearth of high-end motorcycles which Eicher Motor manufactures in form of Royal Enfield motorcycles 350, 500cc. We've seen some great interesting new launches that have happened. They've opened up a new production facility down south, and they've ventured into newer geographies to compete with some international niche and marquee names. We've been positive on the stock, and our target stands at about 35 to 36,000 if I'm not mistaken. This is from a long-term point of view.
Interesting. Would that mean, Gaurang, that you would make an investment into iShare at the expense of the other two-wheelers, which are, well, literally or figuratively down in the dumps? The last 12 months, they haven't really given enough returns. They are trading at lows.
So Neeraj, well, good afternoon to you as well, Neeraj. This is a niche player, 350cc motorcycles and beyond. Others have just started to get into the premium segment, and I don't think Dominar is going to be any match for a Royal Enfield motorcycles, though the ad may try to tell you a different story, but I beg to differ over there. So, you know, here is a case wherein even when the demo happened, Neeraj, they didn't suffer any loss in terms of sales because there are waiting list of almost about 3 to 6 months, if I'm not mistaken. And that still continues to be there in some parts of India. And the flavor for high-end motorcycles is only growing. And the most interesting part is that you find the young gen more tilted towards, you know, the so-called retro bikes, as they are called, for Royal Enfield motorcycles. But you look at the performance, you look at the models, you look at the price tag, and you look at the charm of riding a Royal Enfield motorcycle. I think it's a nice small box over there. So we are positive on Eicher Motors, and we are also positive in terms of rural penetration play, semi-Indian, rural India demand going up for likes of Hero MotoCorp, TVS Motors and Bajaj Auto.
Okay, that's the view coming in on these on the two-wheeler stocks. But Gaurang, the other company which came out with its numbers today was Voltas, and clearly if you go by the numbers, they've stated that some bit of improvement has been seen in their market share. A marginal increase also seen in the EBITDA margins, which have come in at 11.3%, and the stock is almost sitting at days high around the levels of 618. What did you make of the numbers here?
So again, you know, the consumer durable or a white good appliance play. Now, there was a time when ACs and washing machines and flat colored television sets were considered to be a luxury. But nowadays that is not the case. It's a necessity rather than a luxury. And our sense is that the demand for these products, that is consumer durable white good appliances, is going to see huge traction on the higher side from tier 2, tier 3 cities, and also from the semi and rural India, because of the, you know, per capita going up and, you know, spendable liquidity on the higher side. Not only it has got presence in India, but it has got a very large Middle East market also, Voltas. And we are equally positive as with Voltas, Blue Star, Symphony, Whirlpool. These are some of the names that we are extremely positive on amongst the consumer durable white good appliances.
Okay, interesting. Some moves out there. Actually, you know, a couple of those moves that we should talk about. One of them is Eicher Motors, up about 6%. On the charts, I don't think we've discussed this. Manav, 29084 on Eicher. What would the chart suggest?
See, the long-term chart for this stock is definitely very positive. You know, I think if you look at on the weekly perspective also, previously the stock formed a bottom in Feb 2018, and again it retested these lows of 26,000 and has seen a very sharp reversal. So and you know, the prices are also breaking above its long-term averages. I sense the stock is very well poised to test the levels of 32,000, and eventually the long-term target definitely is close to 34,000 on the upside. On the immediate basis, the support for this stock would be at 28,500, and you know, even at these current levels, you see a good risk-reward ratio as the prices are bouncing from its important support and key support levels with above average volume. So definitely it's quite positive, and one can maintain a buy on dips.
And Hadrien, the other two index names which are doing well, BP, HP, would you trade them?
No, I'd actually leave them apart because the momentum that I am actually expecting out of them is really not visible. I think I'll need a little more, momentum along with good volume participation before I actually start, buying the OMCs. So I think at the current moment, I'll leave all those three, aside.
Time now to get to Darshan and Yatin. They join us as usual with their dealing room checks. Gentlemen, good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so one of the stocks that's been spoken about today is Bajaj Finance. Not done too well. It's trading pretty much flat in today's trade, but dealers do indicate that there could be. I think this is what Yatin is supposed to say, but nevertheless, I think.
Yeah. So
no,
okay.
you need to hold on. So Bajaj Finance is something that dealers are talking about. It's moved up substantially. So dealers believe that the momentum probably will continue for Bajaj Finance. ITC again, in a rather weak market, ITC has gained a little bit. It's up almost close to 1%. Some of the domestic mutual funds are now increasing their stake to ITC. And finally, the last stock that dealers are talking about is Bata, trading at fresh record highs. Dealers believe that the momentum will continue. But Yatin, you can start with Sun TV.
Yeah, Sun TV, that is one stock. Of course, post the market hours, they would be reporting their earnings, and dealers on the basis of trends do indicate that this is a buy at current level. Stock hit a 52-week low recently, has been bouncing up, so dealers expect some bit of further bounce back as far as this stock is concerned. Apart from that, Ujjivan, the performance on the quarterly front was slightly weaker than expectations, and from there we have seen some profit booking happening in for the stock. So domestic funds are said to be sellers here. So Ujjivan is one stock wherein dealers expect the downtrend to continue. And on the HNI front, we have a couple of these mid-cap IT stocks, wherein Mindtree is one of the favorites. So HNIs continue to lap up shares of Mindtree in the future and options segment.
We will watch out for these. Thanks a lot for that, Yatin. Well, one more small editorial piece. And Navneet, forgot to ask you earlier, but looking at the kind of trades that are happening, what's likely to enter or come out of the F&O ban?
Just one stock, and I think it has been in focus throughout the session. That's Jet Airways. Remember, it came out of the F&O ban for today's trading, but there's been heightened trading activity that one has seen on the future side. The open interest has gone up. Yesterday, the total open interest was nearly 79% as a percentage of its MWPL, which is market-wide position limit. And if this limit breaches the 95% mark, a stock goes into ban. And currently, if you go by the data that we're getting on both futures as well as option side, it is indicating that it'll very comfortably cross the 95% mark. But just a caveat here, trends change. There could be some intraday trades that could be unwound in the last 15 minutes. But as of now, Neeraj, it definitely looks like for Monday's session, Jet's heading back into the ban.
So how do you approach trade on this one then? Hadrien, you want to come in? Got out of the ban, saw some short positions built up today, will likely enter the ban come Monday morning. How do you trade Jet then? If you have 12 minutes, would you unwind an existing trade? Would you take a fresh trade? Would you avoid it completely? What would you do?
Given the heightened volatility that we have seen, me being me, I would actually avoid the trade completely and try to stick to stocks that have good momentum on either of the sides. So I think I'd prefer something like a Voltas that has gained a good momentum from here on. I think I'll leave Jet Airways aside and place my attention on something like a Voltas.
Okay, besides Voltas, the other stock which has been doing well right from the opening session today is Berger Paints. Let's just bring up that one. In fact, on the future side also, we've seen good activity on this one, 4% higher in today's trade. Gaurang, if I could come to you on the paint companies, there's some, action seen on the screen with regard to Berger Paints. I remember when the earnings had come out, the management had highlighted that they could take a bit of price hike considering the cost pressures that they're facing. And now that the GST rates on paints have come down to 18%. What do you think can be the future of companies like Asian Paints or Berger Paints?
So Berger Paints, Asian Paints, Kansai Narolac, Shalimar Paints, all these paint companies feature in our buy universe, Navneet, and not only this 28 to 18% will add as a huge booster, but the fact is that there is a robust new order market, there is a robust replacement market, and crude oil prices are heading down south rather than heading up north. And that's what exactly we had kind of anticipated. And that's also good news and music to ears, because large part of the input cost for paint industry is crude oil. So margins expansion plus the high-end products, high margin products rather, Navneet, like automotive paints, decorative paints, they have seen volume growth in the quarters gone by. And that excites us in terms of the EBITDA going up and the profitability going up. So we're positive on all these names. And the earlier question we were talking about Voltas, I think in the next GST Council, you will possibly have the tax rate from 28 coming down to 18 for even ACs and some high-end television sets. So that's also going to be a big trigger.
Okay, Voltas sitting almost at day's high with gains of nearly 5%. It's just let's first get actually the closing strategies from our technical experts. Manav, I'm going to come to you first. What are the top strategies that you have right now? Any BTST or STBT for Monday's trade?
See, I have two BTSTs. My first buy call will be on Castrol. You know, the stock has actually seen a decline in last consecutive 8 trading sessions, is at deep oversold levels, and you know, I sense a good bounce back from the current levels as the prices are at important support zone. So a stop of 154 can be placed for an upside target of 168. My second buy call will be on TCS. You know, the stock has seen a good breakout on the daily charts, confirmation with volumes, and the momentum looks quite positive in the IT space, and the stock has given a breakout after consolidation, so one can look to buy this with a stop of 1975 for an upside target of 2040.
Okay, Hadrien, what about you?
Yeah, so it won't be a BTST, but you know, would be a delivery-based buy. So that stock is ITC. We are you know, surprisingly seeing a very good up move over here in ITC, and you know, after a good consolidation of 1.5 week. I think this consolidation is actually aiding ITC to break out of a flag pattern breakout, and flag patterns should not be you know, missed by any of the traders. So you know, it is a big thumbs up for ITC from in my opinion. ITC is all on its way to move higher towards the 340, 345 levels, and the risk reward is pretty much in favor. You know, the stop loss should be very close to 295 to 296 on a downside, and play for a target of 340 to 345.
Okay, buy ITC. The stock's just about sitting with gains of 0.5%. Gaurang, before I let you go, any fundamental pick that you have for our viewers?
So Godrej Agrovet is something that excites us. I think the stock got listed about a year back, if I'm not mistaken, and from there on, I think it's a steady growth story. Post the listing, we've seen some decent up moves. And Navneet, as a brokerage house, we are extremely excited about the entire consumption theme. And this comes from a corporate house which has got excellent pedigree and no question mark in terms of corporate governance, and the kind of business verticals or products that it has under its belt. The growth opportunities galore. So Godrej Agrovet with target of 765, 785 long term.
Okay, Gaurang, just one more question. One of our viewers wants to know from you, given a choice, what would you choose, Dewan Housing or L&T Finance from a longer term horizon?
Well, this is a question where, you know, I'm caught between the devil and the deep blue sea. But if I have to stake my neck, and let me give a disclosure, Navneet, we are positive on both. But the housing finance, pure housing finance companies, HFCs as we call it, excites us to a great extent. Not that L&T is not there, L&T is there, but it has got other products as well. Whereas Dewan is purely focused into housing finance loans. So maybe I would possibly, if given a choice, I would first pick Dewan Housing followed by L&T Finance and Holding. I beg your pardon.
Sorry, no, did I hear you right? You're saying you'll choose an L&T Finance Holding over Dewan Housing Finance?
No, Neeraj. If given a choice, first preference be Dewan Housing followed by L&T Finance.
Okay, perfect. Gaurang, appreciate you taking the time out and joining us. Thanks so much for being with us today on Countdown. By the way, both the stocks marginally off in trade. A stock that's doing rather well for itself, Jubilant Foodworks, 1523. Manav, I don't think I've asked this to you, but 1524 actually now and counting, up at life highs. So what would you do here? Let's assume you don't have a position here, but you're excited by the movement in the stock. Would you take a position, a fresh one?
Yes, Definitely. If you look at the chart on the intraday basis, there has been a breakout after 4 days of consolidation. The volume of today is higher compared to last couple of days. So definitely there is a new momentum that is building up, and most importantly a good fresh weekly close. So I think going forward, this stock has not breached below 20 DMA since quite some time. So it has been forming a series of high tops and bottom. A stop of 1485 can be placed into this, and we can continue to expect this upside to go towards the levels of 1580.
Okay, Hadrien, it's been a good week for PVR, the stock which was correcting, and finally today it's back above the mark of 1300. In fact, throughout the week it's been trading in the positive territory. Would you take a bet here?
Yeah, I would, be comfortable remaining long here, but there is one single, parameter that is actually, creating a question mark in the overall view that I am actually having, is the long-term 200-day moving average. So that is close to the 1320 to 1325 zone. Once I see PVR, surpassing the 1325 levels on a closing basis, I would definitely, remain long and not unwind them. In fact, if I even cross-check the weekly charts, 4 weeks back we saw a very bad weekly breakdown, on the charts, and that has completely reversed in the past 2 weeks. So that's a very good sign showing that momentum is coming back into PVR. I think 1325 is a small hurdle that should be surpassed. Above that, definitely long position should be held on to.
Okay, hold on to long position. This week itself, as you can see on the screen now, the stock's up nearly 12%. In fact, last Friday was a good session for PVR. It was up 5 to 6%. Just very quickly, Manav, a technical view on Bandhan Bank. One of our viewers on YouTube has asked if you could just share some levels to be monitored on this one.
Yes, see, the prices have actually seen a good breakout yesterday and has retraced the important support levels. So one needs to definitely maintain a stop loss for this, because the stock has been in a overall trending action, and on the lower side 685 is an important positional support, and one can place a stop loss. The overall trends remains positive as long as the prices are holding the support levels. I sense going forward the stock is likely to make higher highs. One can maintain an upside target of 780, which could be achieved in the next couple of months, and definitely one can continue to hold this stock.
Okay, you can look to hold on to the stock if you have a position, if any, on Bandhan Bank, which has seen some bit of profit booking actually in today's trading session. But just 2 minutes to go for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, after hitting fresh highs almost every single day this week, some bit of profit booking has come in today.
Yeah, and stark contrast now to last Friday. Last Friday we were all in the green, doing very well. This Friday have come off a bit, and SBI and some of the other banks to be blamed for this. To be honest, the Nifty Bank is down 0.75%, and that spoiled the mood. Bring up the mid caps and the small caps too. I doubt that they would have been hiding away. There were not too many big movers any which was in the session today on the gaining side, and 1.2% for the small cap space shows that little bit of a pain. Don't think this is unwarranted. Don't quite know if it's the start of something more severe, but for now we'll just leave it at that. 1.2%, not the best of Fridays. Let me talk about the large caps though. Eicher Motors, you will see, would probably be topping the list of gainers today, and yes, it is 5.5% up. Strong show. BPHP have done well. The numbers were okay too. IOC numbers, we'll analyze all three of them on Monday. IT's had a half decent day. HCL Tech and TCS certainly have done well in the session today. But what about the losers? That's the key thing. SBI, 4.5% lower post the numbers. Commodity stocks like Vedanta came off a bit. Hindalco came off a bit despite the numbers looking okay. Sun Pharma, I think the Taro numbers kind of rubbing off on the stock. Tata Motors, of course, continues to grind lower. And somewhere down there, you also have commodity stocks like Tata Steel and Ultratech Cement not doing all that well. So, yeah, the pain points were a lot larger, and stocks like SBI, when they correct 4.5%, put that pressure on the markets. But mid caps and small caps too, Navneet, while there always would be gainers and losers, but the trend not the best today.
Not at all, Neeraj. In fact, the fall that one saw for a lot of stocks in the broader markets was quite sharp. But let me first start off with the gainers for today's session. Den Networks was quite active right from the word go. As you can see, actually, the stock's closing with an upper circuit limit of nearly 20%. The other one which was active, and we've been talking about this one. Berger Paints, it had a good opening. The stock sustained the gains despite of markets being volatile today. On the future side as well, the trend was looking pretty good. The stock saw fresh long positions and it also touched its 52-week high. On back of earnings, Voltas saw a good set of numbers, some bit of market share increase. That's what the numbers indicated. And this one too is closing at day's high. So a positive sign. Let's see if the gains can continue on Monday or not. PVR is the other one which has had a good session this week, up 12%. And remember, the stock had fallen to those levels of 1100. From there now, today it surpassed the mark of 1300 in trade. And this too is closing at day's high. That's again a good sign. Exide had a good session today. That one went up in trade, up almost 2.5%. Bata, that hit all-time high levels once again. Fresh long position seen on the futures side. Despite of higher valuations, the stock continues to move higher. On the losing side, a couple of result reactions. So Matrimony was down quite sharply in today's trading session. That fell nearly 17.5%, closing at day's low. Second straight day of losses coming in, and sharp losses for something like Skipper. Yesterday it was down somewhere between 11 to 12%. Today also it fell nearly 12% in trade. And also something like Panama Petro, that had a bad day. Selling pressure seen for this counter as well, 12% lower. So you can see the losses were very sharp. JTE, KT, erstwhile Sona Koyo. This one too came out with the numbers, and you can see after the numbers, the reaction, the stock was down 11%. Jet Airways, the company's deferred its June quarter earnings and came out of the F&O ban. Fresh short position seen for this one. Jindal Steel and Power, the numbers looked strong for the June quarter, but selling pressure seen. The stock closing at day's low, 6% lower for this one. And also from the financial space, Ujjivan Financial was down, and the entire PSU banking space came under pressure. So you had something like Canara Bank too, that fell almost 4 to 4.5%, and it was just not restricted, mind you, to Canara Bank. The Nifty PSU banking index, in fact, was the top sectoral loser. While it gained in yesterday's session, Neeraj, I think it gave up all its yesterday's gains.
Yeah, it did. And therefore the week, if you can get the MRR function and just highlight what's happened in the week gone by first before we talk about what the participation today was, because while this is what we've already discussed what's happened in the day, but the weekly performance, Navneet, had it not been for the corporate facing banks, we would have been in a spot of bother for sure.
Yeah, topping the list is ICICI Bank, which is another heavyweight on the index, so that gave good support to the index, at least for the week. Hindalco was up, and we had a couple of result reactions also coming by, and Reliance continues to support the markets.
Yeah, M&M doing okay for itself, but Axis Bank and Yes Bank from amongst the other banking names which did well. The losers included Pharma, Lupin on expected lines, Sun Pharma. I think some of it has got to do with today's move as well, 3% down after Taro's numbers not turning out all that well. Adani Port, I believe, was a result reaction, but Pharma has had a tough week, the last one for sure. Three names out there on the index, and all three in the losing side.
Yeah, let's see. I think Sun Pharma comes out with the numbers now next week, how the consolidated numbers look. But today's move was largely, that is what is being reflected here. Can we also pull up the mid-cap index and see which were the top gainers and the top losers for the week? However, there was some bit of traction coming back, but today's selling pressure was quite severe that one had to see. As we just highlighted, the losses were somewhere between 10 to 15% post the numbers of a couple of companies. So here you go, Vinati Organics. We did speak to the management, and this has solely gone up on back of good quarter. Something like Reliance Naval Quality. Actually, these are the stocks which have bounced back because they had fallen a lot. Merck, this has entered into the ASM, I guess, today. Den Networks was up 18 to 19% today. So the majority of the move has come in from today's gains, and Hathway too was up almost 14 to 15%.
Yeah, well, interesting moves. First Source, 17%. Surreptitiously, I didn't see too much of it there in the week. It's down about 17%. Dixon, 11%. Some very interesting names. The obvious one, of course, was Jet Airways. In large portion due to what's happened in today's trade. Okay. Lastly, just the participation before we get it to our guests. The participation for today. And let's see if we're still nudging the same numbers. Yeah, we are largely out on the cash side, Navneet.
Yeah, cash side, I must say, for at least this month, we've maintained the range of 30 to 33. And the F&O has obviously averaged out because yesterday it was higher due to Bank Nifty weekly options expiry day. So just about above average turnover is what you can call for NSE F&O.
Yeah, close to 5,000 crores for BSE cash
I think,
as well.
Yeah, that too is on the higher side.
Interesting cash turnover today. Final thoughts from our experts. Hadrien, are we by any chance entering a period wherein you would be skeptical of further up moves? Because until yesterday, the conversation was that if the Nifty Bank were to fall about 200 points, that's a great buying opportunity. We haven't seen any kind of long positions getting created or being spoken about as yet on the Nifty Bank.
Yeah, so I'll come to the Nifty first. I mean, we have to actually analyze how shallow the falls have been. If you see the past one and a half week, we have seen a steep, uptrend, and the declines have been arrested pretty quickly on the downside. In fact, Nifty has not managed to breach even its 5-day moving average. So, that's the strength that we're seeing in the index. But unfortunately, what we are seeing on the daily charts for the Nifty is there is a small divergence on the relative strength and the price action that we are seeing. Taking that in mind, yes, definitely, to answer your question of being skeptical, I would actually go ahead and hedge my long position on the Nifty by buying 11,400 put option. That's just to hedge my position. The overall view definitely is bullish. The trend is still very much intact, and I would continue to remain long, except for this put option that I would buy just to hedge my long position. As far as the Bank Nifty is concerned, I think Bank Nifty looks much more stronger, compared to the Nifty. Given the fact that SBI has come out with their results, and we need to see a little bit more of a cool off coming on that part. I think Bank Nifty would enter into a sideways move that would actually trigger good returns for the 11,400 put option that I'm talking about. So I think yes, consolidation is bound to come in the coming week, and I think from there on we'll once again resume the uptrend. Bank Nifty, in my view, has a potential of rallying towards the 28,750, 28,800 zone. So yes, every decline, if you may say a 150 to 200 point decline, should definitely be a good opportunity to enter long positions in the Bank Nifty.
Okay, Manav, coming to you, would you use these declines to make any fresh long positions on Monday?
When we're looking at this on the weekly perspective, consecutive 5 weeks of rally of over 900 points Nifty, I think it's time that one should look to take some profits off the table. And I sense there could be some sort of a consolidation going forward, and there could be some more sectoral changes that could happen. So once if Nifty breaks 11,350 on the downside, you could see some further pressure, at least for a short-term perspective, for some profit booking ahead. So purely on this risk-reward basis, I don't see any good risk-reward ratio in Nifty or Bank Nifty for any long position on the positional side. Definitely there'll be some choppy moments on the intraday basis which could be taken for longs or shorts, but I think 11,200 and close to 11,000 could be the right levels to initiate fresh longs for the Nifty. Bank Nifty has support at 28,000, so once if it breaks that, another you could see some sort of a profit booking coming forward. So as long as 11,000 levels is sustained on a positional basis for Nifty, I think everything seems fine, at least on the trend perspective, but I sense there could be some more room on the downside which could provide some better margin of safety.
Okay, well, today's closing could be weak, but this week was definitely good for markets in terms of some technical levels. Nifty crossed the 11,400 mark, and Bank Nifty also surpassed the 28,000 mark for the first time. Manav, as well as Hadrien, thanks a lot for joining us and taking us through the technical views, and have a good weekend. Well, with that, it's a wrap on this edition of Countdown. Thanks for watching the show. It's goodbye from Neeraj and my side, and also the entire team who's put this show together. Don't go anywhere. Lots more lined up on the other side.